Muchas gracias. Muchas gracias. Hola a todas. Estoy muy feliz de estar aquí. And that's all I'm going to do in Spanish. But I am extremely happy to be here among many friends and many new joiners to the Impact movement. I'd like to build first on Amit's remarks about the sense of urgency by reminding you all of a quote from the Secretary General of the United Nations, Ban Ki-moon, who tells us that we are the first generation that can end poverty, and that we are the last that can take steps to avoid the worst effects of climate change. And we've heard such a lot of inspiring and good news this morning. I was planning to reel off statistics about 500 billion, according to Jin, invested in impact investing, about the growth of 17% in the asset class. Sustainable and impact investing is one of the fastest growing elements in investing more generally. And we are seeing impactful strategies right across all asset classes. There were the days when we thought that impact was done in venture, in private markets, in small companies and social enterprises. We now see sustainable forestry, we see water bonds, we see green bonds. So we see an enormous amount of innovation right across the spectrum of traditional asset classes. So there is a lot of really exciting momentum, and we should all be delighted about it. However, the challenges and the opportunities that we face are very urgent. The global goals, next year we will have just 10 years to achieve the global goals. And just for a minute, I'd like you to all cast your minds back and think where you were 10 years ago. For only the very youngest in the room does 10 years ago seem a long time ago. We have only 10 years to achieve the global goals, and that requires not 500 billion, it requires, as Ronald said this morning, trillions. So, General Eisenhower apparently said, leadership is the art of getting people to do what you want them to do because they want to do it. So how do we get large amounts of those that manage large amounts of capital to want to invest in more impactful products? What will unlock more of those flows of capital? How will we get from the billions to the trillions? What's the role of the DFIs? What's the role of the regulators? What's the role of the public policy makers? That's our subject for this panel. And as Laurie said in the last panel, we don't have all the members, not everyone from capital markets is yet in the room. But we do have a really interesting panel in which, in contrast to the last panel, there was a lot of people and institutions that have been thinking about impact investing deeply for a long time. This panel brings some really new voices and really new institutions into the room, which is incredibly exciting. So they are really the perfect people to tell us about how we get more institutional investors allocating, how we get the idea of impact into asset classes, not just financial asset classes, impact asset classes. So three of the panel are in large financial institutions of one kind or another that are beginning and actually sometimes already quite active in impact investing. Urs, I would start with you, if I may, because you're a co-founder of Partners Group. Partners Group manages, I think, about 90 billion in private assets, and you have created to date 2 impact-orientated strategies. Could you share with us what has been your experience of the response of investors? What types of investors come into these strategies easily? Which ones find it more of an obstacle? And how can we unlock it for those that find it more of an obstacle?
Yeah, we have, as you said, we have kind of two. One is more scalable. That's what we do is we follow the UN Sustainable Development Goals. We call it PG Life, other call it TPG Rise or whatever. This is more scalable. Um, these are all the deals that we do at Partners Group anyway. We just look through the lenses of sustainability. It's roughly 1/3 of our deal flow. You could call it really, without looking at any greenwashing or whatever, really they are alongside the Sustainable Development Goals. We see more and more institutional clients interested in this, and that's also, I would say, driven by the clients, partially as well driven by us ourselves, because we have been the first ones signing the PRIs from the private equity firms already when nobody talked about sustainability back then. So that's one side. That's more like scalable. Here you can invest $1 billion or $2 billion. Yeah, that's our normal deal flow, just sustainable development goals. Then you go more in the impact side, when I call it social impact, deep social impact, where you really help the poorest of the poorest. And that's something which we initiated, personally myself initiated it back in 2015 with PG Impact. That's a sister company to Partners Group. And there we do deep social impact. That's much more difficult to convince institutional clients because it's not yet so proven. That's our goal. It's my personal goal. I put all of my money in my foundation. The asset side, it doesn't make sense. I don't need more money. It doesn't make sense that I invest this into the Dow Jones or whatever. So from the foundation, my whole assets on the foundation is going into impact investing. The first funding in this, we manage now about 350 million in this PG Impact. I must say the majority is other foundation, families, high net worth individuals, and it's only a handful like Vatican, BM Foundation, and some Nest, it's a sustainable pension plan in Switzerland, who are investing in there. My goal, my personal goal, it was the panel before who said where you want to be in a year. I say where I want to be in 10 years. I want to see a Partners Group in impact. With several hundred employees and several billion under management for deep social impact. And I'm sure it's possible if we bring the returns. The proof is still to be made by us, but we are on the right way.
Thank you so much. And I think it's fascinating to hear that, because if you think about how we've seen the history of impact investing grow, it has very often been the families and the foundations, endowments that have come earlier into impact investing. You're saying something slightly different, which is the part of Partners which is doing the pioneering stuff, the stuff that doesn't yet have track record, is still appealing to those types of investors. And then the part where you're taking assets that have a long track record and essentially creating a pool of them that are impactful, that's where the institutions are sitting. Is that right? And how do you personally reflect on that in terms of what do you see the future being for Partners Group? You've talked about a separate Partners Impact. To what extent would PG Life also have an effect, do you think, on the way that the rest of Partners invests? Because some of the things that we are thinking about in this room is when the mainstream comes into impact investing, how does that affect the other investments that they make, if indeed it does?
I mean, that's the biggest problem. That was what we discussed in Partners Group as well. What are we telling the people who go in our normal direct programs? You are not sustainable. It's kind of, you know, but at the end, I think that's, I mean, the money worldwide will move, or the institutional investors will move where the money should go. And we see just the beginning of this, in my view. I'm convinced that's not just a fashion. The UN Sustainable Development Goals is not just a fashion who will be out in 5 years. We're going to talk about something else. It's needed, it will be done, and I'm completely convinced. But having said that, you still see, especially United States, all the pension plans there, they don't think about, I wouldn't say all, but most of them, they are really only thinking about returns. And what's interesting actually is that sustainability, we made a study of all of our deals since the late 90s. In private equity, if it's sustainable or non-sustainable, same return. Infrastructure, same return, doesn't matter. Private debt, substantially higher return when you just look at sustainability. Very interesting. So you see, you could just invest. Having said that, if all the money flows into only sustainable investing, the prices will roar forever. I mean, there are things that we are producing who are not so sustainable. I guess the chair I'm sitting in here is not so sustainable. But still, we need to sit, right? So it's kind of difficult to say all the money has to go to sustainability. But the more it goes there, the better for the world.
And that's great, because that comes back to the idea that did come up in the previous panel, which is the continuum or the spectrum of capital. You know, are you making a decision in terms of your impact management to avoid harm, to benefit all stakeholders, or to contribute to solutions? You can no doubt make this chair in a more sustainable way and with better employee rights, for example. So there is impact to be had even potentially in the making of your chair. Can I turn to Christina, because Christina, now you are a new entrant to the field of impact investing. In your case, though, you've decided to set up a specialist firm, be part of setting up a specialist firm that's going to be dedicated to impact. And I think you've been working on fundraising. What has been your experience of, again, the types of investors that come easily to the table, the ones that are harder, and what we might do, you know, to try to unlock the obstacles for those that find it harder?
So thank you, Michelle, and good afternoon to everyone. Well, we were Blue Like an Orange was created as an impact fund from the inception, and I think we are focused only in Latin America at this point. And I would echo in terms of pockets of capital, the traditional capital that's being most, I think, inclined to or advanced in the impact agenda is the family offices, the high net worth individuals, foundations, and so forth, and a few institutional investors. I'd like also to add that, you know, although we haven't raised money and we don't intend to raise money in Latin America, it's interesting to notice that the market in Latin America as well, I think it's still a little further behind on the impact from a capital point of view or a fundraising point of view. The pension funds are not actively involved in this. The family offices, I can speak more of Brazil and other countries as well, Latin America, you can see more and more of that coming into the agenda. I think in terms of accelerating the ability to communicate and getting more investors to really commit to impact, I think it's transparency, accountability, and a clear way of measuring impact. In our case, we follow the SDGs, and we have clear metrics for, for the goals, and we have baselines and goals. And the first screening we do is impact. But I see a lot of multiple strategies in impact with different approaches, different methodologies, which is interesting as the market is evolving very, very rapidly, but it's also creating at some point confusion and uncertainty. And that makes it difficult for fundraising and for investors to differentiate and decide upon which strategy to back up.
Mm. And can I ask, so it's a great point about the need for us all to, over time, hopefully agree the ways that we're going to measure impact so that capital can choose, as Ahmet said, I think it was Ahmet and probably Ronald also, can choose the managers that are able to achieve the best impact as opposed to the managers that are able to report on impact the best. Do you find that question of impact reporting coming from your investors? Because I think historically we have found as a manager that we were tending to be ahead of what the LPs are asking. Now I wonder whether the LPs are starting to catch up and ask those tough questions.
No, we do find that they do ask, but I think they have different answers every time they ask. So it's not always the same answer, and that's what they're trying to understand exactly how you apply impact, how you measure, how your strategy is going to evolve over time. And I think the more dialogue they have, the more they will learn about it and make able to, and decide which ones they want to support. I do think that as we discuss impact in Latin America, we try to make it as not only getting everything ready and done as you make the investment, but be a promoter of impact. I think as an investor, not only you have to have a clear set of rules and framework and et cetera, how you're gonna implement your strategy, but also we see ourselves as a promoter of taking the companies we invest in to a next level. Yeah. So we do require a certain minimum threshold for a number of things that we look into to be able to commit the capital, but we don't want to stop there. We want to promote that further and be a promoter of impact in the long term and making that company and that target portfolio company to evolve over time on the impact agenda.
Thank you. Can I turn to you, David? So you lead Stepstone's activities in Europe. You're involved with ESG. Stepstone advises, I think, advises or manages a quite extraordinary amount of capital. I think 270 billion, is that dollars? Whatever it is, it's a lot. And so you're involved with creating portfolios for some of the largest institutional investors in the world. Could you share with us the extent to which impact investing is becoming something that's being asked for, whether there's any types of investors in particular that you're seeing that coming from, or parts of the world that you're seeing that coming from? And if you can, any gaps where you feel that investors are not yet getting hold of this idea?
Thank you. And good afternoon, everybody. It's a pleasure to be with you all, like-minded people. To answer your question, Michelle, I think that we sit in a very privileged but also responsible position, in that we sit, very simply put, between a wall of capital on one side, whether or not it's some of the family offices, endowments, foundations we heard about in the prior panel, to some of the big pension funds, sovereign wealth funds that are beginning to enter this asset class. And I think it was actually Valeria on the prior panel pointed out that one of the challenges for many of the large institutions is not just the universe of opportunities, but actually the scale of the opportunities for those institutions to invest in. And so what I think first and foremost is that we're seeing a shift from this being predominantly families, high net worth, foundations and endowments to a broader institutional set. Secondly, I would say it's interesting, there's a very big geographic difference. So, for example, I had our European business, and it's no coincidence that Europeans as a whole, but certain geographies within Europe, particularly the Dutch, the Scandinavians, the Germans, the Swiss, but also other regions of the world, like the Australians. We heard about GPIF from Amit on the prior keynote in Japan, and also certain regions in the US are getting up the learning curve. So I think there are definite big differences geographically. And to answer your question then, I'm hoping that that will spread geographically. And then thirdly, I think it's important to note that when people talk about impact, there's different definitions of how people think about impact. So when we look across our institutional client base, some of them are very clear about what they want to deliver, and it could be mission related. For example, the Children's Hospital would be no surprise that they want to have healthcare related impact, for example. Whereas many of the larger investors actually have an impact agenda, but don't necessarily have a kind of a definition behind what that is looking to achieve. So I think that, to answer your question, I think there's a huge amount of increasing appetite. I think that 2020, as we look at it, is really going to be a breakout year. And in the sense of when you looking at 10 years ago, I think that's an interesting point. But when you go downstairs, there's one of the boards that someone's posted what they really hope when they look at the whole impact dialogue that we're hearing about is in 10 years' time that it's the norm. And actually, we don't actually have specific conferences or discussion points, but actually it becomes part and parcel of the DNA of every single firm, both within the private and the public markets. It's interesting. I'm going to a conference just in Amsterdam on Thursday to talk about this. And again, this is somewhat of a niche area of discussion, but I think increasingly this is becoming mainstream, and that's my hope for the future.
Thank you. And you mentioned that this difference, which really resonates for me, that a lot of the families or individuals will come to impact investing with a particular goal. And whereas the institutions will tend to come at it, perhaps because they're so broad in their asset class allocations, they'll come at it with a slightly more generalized intention to do something positive. Are you finding yet that their sustainable development goals are becoming a framework for them to think about where they want to place their capital, or not yet?
Well, I think you've kind of hit the nail on the head, and it's come up in a number of the discussions this morning, which has been fascinating in terms of measurement. I mean, Ronnie Cohen pointed out right in the opening keynote, but also Amit just on the prior discussion was talking about metrics. And I think that fundamentally, it's absolutely critical to be able to have not just an ability to measure both financial returns, but also impact returns, but to have some sort of conformity. I know that, for example, Jin was talking about what they've launched. Your own firm has been doing this for many years in an incredibly successful way. And I think one of the challenges, whether or not it's the family offices, the endowment or foundation world, but particularly some of the bigger pots of capital that are frankly less familiar with this, really need to have comfort that what they're doing doesn't only generate non-concessionary returns, financial returns commensurate with whatever benchmark they're looking to hit, but an understanding that it's not just anecdotal discussions of SDG delivery, which tends to be what happens, and actually some really empirical way of giving people comfort that what they've actually invested in, particularly if it's going to be in an incredibly meaningful step change in terms of absolute dollars, pounds, euros, whatever, I think that's something that really the entire industry will need to get their head around in terms of making sure that we come up with something that that is effectively conformed ultimately over the industry.
Yeah. It's maybe worth noting on that maybe it will come up later that the UNDP and the Impact Management Project are doing some work to try to be able to accredit the approaches of investment managers to SDG investing. It will be, I believe, based on accrediting that they have the right processes in place, because we may need to wait till past 2030 to be able to have a perfectly shared metric of whether they're achieving the SDGs, but at least those kinds of accreditations are starting to come through.
Yeah, if I could just make one final point on that, which is an interesting paradox, actually. We have, at least within the world of private markets, a real challenge just because of the nature of private markets, right? So underlying managers tend to have, be protective of data for the underlying companies. And so compared to public markets, it's just difficult to educate people that it's in their interest, again, as Saroni was saying right at the beginning, to actually be able to affect a premium potentially for a valuation of their company if their P&L or their financials effectively reflect how impactful they are. And yet the paradox is that within private markets, you have such a greater ability to be impactful. So I think that's going to be the real focus over the next few years in terms of delivering that empirical evidence that you can generate both financial and also impactful returns.
Thank you. And I didn't ask you to do it, but you've made the most perfect segue, actually, to Eric. Now, Eric, you're different in a number of ways to the rest of the panel. One is that you've been in this for quite a long time, doing impactful investing. Another is that you've been doing it in public markets. But you are similar in the way that you have very recently gone over to a very large asset manager. And so you're becoming, if you like, a specialist in impact within a very large asset manager. You chose to move after 20 years at Wellington over to BlackRock, I think, in the last month or two. Why did you do that, and how does that relate to this subject of disrupting allocations for impact investing?
Okay, thanks, Michelle, and thanks, GSG and all of you. I think that brings up the elephant in the room whenever you might have BlackRock on the stage of an impact conference, so I recognize that. And for many of you, and for me, BlackRock has always been a sort of paradox. Ronnie referred to Larry Fink's comments, which we've all followed. And then at the same time, and those have been inspiring, but at the same time, we have seen that there are funds that are the epitome of greenwashing or impact washing, and watched with chagrin about that and thought, how will we ever move, again, to Ronnie's, from billions to trillions, if that's what we look at. We've seen the inconsistencies that are inherent in ETF, in passive investment, that have to be dealt with. So when BlackRock came to me and I said, no way, I would never be interested in going there. You are my punching bag for what is greenwashing. I learned that BlackRock has an intention to move to catch up to Larry Fink's aspirations. And so I think that it took a little bit of convincing, and it might take a lot of convincing to you all. I understand that. But what I was promised to be able to do is to continue doing the high authenticity impact fund that I do in public markets, but then also to help set standards for what is sustainable, for what is impact, for distinguishing between just SDG alignment versus SDG advancement, which I think is really important, and to require impact measurement if something's going to call itself an impact fund, and to have enhanced engagement if something's going to be an impact fund. And then for me, the most important thing is to empower other investors, of whom we know so many, that want to do an impact fund. They may not even know exactly what it means to do that or what it is, but to help them learn how to do that so that when we think about from billions to trillions, you have to have many different strategies. You have to have the entire range from the smallest venture to the most established companies be in this space. And conventional investors don't know how to do it, and many of them would like to. And so that's the excitement about being there. And you can tell I've drunk the Kool-Aid, but I actually did think about it a lot first, and that's what I hope to do.
Yeah. So do you see yourself almost as the impact Trojan horse going into the large asset manager? And but seriously, is it your view that, a little bit as David was saying, that and I think you had 10 years, David, you were quite fast with this, that impact as a third lens in investment decisions will become a norm in asset managers like that? Or is it more that you're able to build on this infrastructure of this large asset manager and therefore do a lot of really impactful product that you might not be able to access otherwise? Where do you see the future in 10 years?
So I think it's important to recognize, as Urs said, that and sorry, Ronnie, the whole world will not be impact, but hopefully the whole world will be sustainable in how it invests, and that everything across the spectrum will increase its sustainability. And so I don't have aspirations that all $7 trillion at BlackRock will be impact, but I think that a few years from now, anybody investing something without a lot of mindfulness about sustainability will be taken to task. And then I think there will also be a lot of opportunity for everything along the way to become more sustainable, to become actual impact, for impact to be better, and we usually talk about the private markets versus public market investing in impact. I think there'll be a bridge across all of it, which will be important. I think even at BlackRock, there will be investment in private impact, and I think there's scope for all of us to collaborate and partner in making that happen.
Fantastic. We've heard such a lot, incredibly encouraging news about voluntary entrance into impact investing, whether it be from a new specialist, whether it be from mainstream large asset managers. I'm interested in our final few minutes to hear what you think would be the biggest levers to getting more institutional capital into the market. Do we need government intervention? Is it going to be a movement of pensioners? Is it new product innovation? What is it that we need most to leverage more capital? Who would like to start? Shall I get back to Urs? Would you like to start?
Take a shot. I think if you look at deep social impact investing, what we need is the proof that returns work. We work on this, and I guess it will be proven that it works. One thing that a lot of people forget, and all your investors in here are interested in impact investing, deep social impact, one thing you should not forget is very low correlation to public markets, because the people who pay for our returns don't even know what Dow Jones is. And if Dow Jones drops 40–50%, they are not much affected. So that's at least a big plus, which people should keep in their mind. The second thing is, we discussed it before, and I know there are some DFIs in here. I really urge, DFIs are very important. It's a huge amount of money, but unfortunately this money has a political agenda. And please don't go into countries and just shuffle too much money in there and make that the private market is not competitive anymore. So we have seen this in PG Impact, several places where we just couldn't do investments anymore because we need a certain return, and some DFIs are not for returns. I think DFIs, we should work much closer together. Because we could overcome the hurdle with the big institutional clients who want to have a certain guarantee. If we work together, take our private knowledge of doing investments, institutional knowledge about doing private investments, and pair it with money from the governments as a guarantee or whatever structure, that would really help to accelerate. And they should not compete, but work together with us. That's my wish.
Well, both the moderators of the last two sessions are on the board of the UK's Development Finance Institution, so Laurie, we're listening. So DFIs and track record. Christina, is there something that what should governments do? We may have policymakers in the room. Do you have any advice for them on how to catalyze more impact investing in their markets, particularly perhaps Latin America?
Well, I'd like to draw a parallel with something that happened in security markets in Brazil regarding governance standards, which was regulated in a way that changed it was a paradigm shift in the Brazilian market in terms of governance, right? So, and that in itself, became a driver for the whole business community and the capital and etc. So I think one angle other than federal legislation or tax subsidies or something like that would also be creating a more a regulated framework in the public markets, so that companies that are public start having to disclose what they do, step by step, as this evolves, and they can adhere to certain standards as this become more and more, established. So that's one way I think that will drive a lot of a framework that people can relate to. It's transparent and will promote an example for society and also to attracting more capital. So that's a way I think that's more positive agenda that can be, maybe less political per se, and that creates a more market-driven, so to speak, a regulated environment, so that the public companies can be a benchmark, at least a transparent one, and eventually with accounting for impact as well being implemented, you can see and measure the benefit, and that can create more money coming not only to the public, but also to the private market and the pension funds and other pockets of capital being more easily related to what is impact, how can be measured, what are the stages, how can I relate and compare.
Thank you. Now I'm going to put even more pressure on our final two panelists here because our time is coming to an end. So if you had to name the one single action, really by either policymakers, investors, or anyone, that could unlock more capital into impact investing, what would it be?
I'll say
Eric.
two, but I'll say them really fast. On one side is standards. So standards like the GINS impact base or tonic, those kind of things are super important. I think people look to you because they don't know what to invest in. And the other is the DFIs who've spoken about and participated in investment guarantees and that kind of thing. But I think that there hasn't been that much as what your government is thinking about, which is long-term or even permanent capital, which I think can be transformative for bringing impact down to smaller size.
Yeah, because let's not forget that a lot of the global goals need to be achieved in emerging markets where DFIs can be part of blended finance.
Just two quick ones. First of all, the definition of when people talk about generating competitive returns can be very confusing and ambiguous. And our impact business sits at the center of all of our private markets. So when I think about what makes an impact venture capital deal is a very different return from a renewable energy or an agriculture and timber deal. So I think if we can be much more nuanced about making sure that people think about what impact returns are appropriate for what asset class, what geography, what stage, what size, I think that's going to be very helpful. And then finally, just going back to governments, if I may, a very high-speed anecdote, which will bring it to life, particularly for government people in the audience, is the reason I'm here and talking about our impact business is because a couple of years ago in the Netherlands, I was speaking to some of the largest pension funds who wanted to invest in our private equity business. And right at the end of the meeting, someone said, "Can you tell us if this is going to do any good?" And I said, "What do you mean good?" And they explained that they work for an investment team who works for a CIO, who works for a CEO, who works for the board of the institution, and all of those boards report to the government. And the government had explained to them that unless they can demonstrate that what they're investing in private markets generates good, however that is defined, they're all out of business. And that's why that region has become such a world leader and cutting-edge thinker in terms of this global movement. So I would think that that's a very powerful way of thinking about the additional work that the governments, media, and regulators can do in this business.
Thank you. Mario talked this morning about the need, and Alejandro as well, about the need for a collaboration and a positive partnership between government and investors to catalyze impact investing. I think that's a great place to finish. Our time is up. Please join me in thanking a remarkable panel.